What?
Can you buy a home and still have a student debt? You betcha. But we'll go over the process. Next, we'll cover what's going on with mortgage rate and where they're hitting.
And then we're going to talk about what's happening with inventory levels and is it cheaper to buy in the winter? So this is the Max One market update. My name is Alan Richard. I'm part of the Max One team.
My name's Ming Richardson. We're here to glad help you.
Yeah. So, this past week, the Federal Reserve cut its benchmark rate by 25 basis points, right? And everyone kind of expected the Fed to cut the federal funds rate. But you know what? Even though they cut the federal funds rate,
The mortgage rate went up just a little bit.
it did. That didn't really happen. And so, we know that the cost of financing, of mortgaging a home is higher now than it was back, say, in 2021, for example.
Absolutely.
I mean, in 2021, the interest rate was around 3%. Now it's about, in the
It's
mid
almost
sixes. Yeah.
close to 7.
Yeah. And so like that has impacted payments to a great deal.
Almost $900.
And so that makes a really big deal. But like when you look at what impacts those mortgage rates, we know that it does, but like how do you know when's the right time to buy? How do you know, should I look at mortgaging, at getting a mortgage or not? So first thing you got to understand is that the Federal Reserve, while they do set the federal funds rate, that doesn't set mortgage rates. Mortgage
Correct.
rates follow closely with the 10-year Treasury, and the 10-year Treasury, those are government backed T-bills, 10-year Treasury bills, and mortgage rates tend to follow those really, really closely. And those mortgage and the 10-year Treasury is heavily impacted by the markets.
So when the market's risky, the investor will move their money to the Treasury bill.
Yeah.
And this will cause the Treasury bill to rise and therefore impact the mortgage rate.
Yeah, because when more people are in there, that makes the prices go up.
Correct.
Another factor is mortgage-backed securities, right? It's like back in the summer, we just talked about 2021. The Fed was buying a ton of mortgage-backed securities, and all a mortgage-backed security is just a big bundle of mortgages put together that are bought and sold kind of as one big group together. And so the Fed used to buy tons of these, and now they've been selling them off for a couple of years now.
When they start selling, it's going to impact your interest rate.
It does, but they should be done selling those
hopefully
really
by
soon.
This year, if not by beginning next year.
Yeah. So for a lot of buyers, that kind of stuff, they're looking at a lot of these different factors. And so first I want to say, make sure you're paying attention to what's happening in the U.S. and not necessarily outside the U.S.
Correct.
Because a lot of other countries use adjustable rate mortgages. Here in the U.S., the vast majority,
fixed rate.
Yeah, 95% are on a 30-year fixed rate mortgage kind of thing. In a lot of other countries, they have adjustable rate mortgages, which means that they are like inflation worries, those kind of things can impact what happens with their housing payment. More Americans are protected from inflation worries by that. Now, right now, the average buyer spends about 35% of their income on total housing purchase. I mean, total housing costs. The average renter is currently right now cheaper to rent. So the average renter right now is spending around 31%. And that's from the U.S. Census Department. And so there is about a 4% savings if you were just looking at straight buy versus rent right now.
So this is a great time to encourage your potential buyer, to save for the down payment and also the closing costs.
See, on one hand, it is cheaper to rent, right?
It is.
We totally get that. However, the other factor here is that where wealth comes from in the United States,
it's through home ownership.
It's from home ownership. And so like you as a borrower, as a buyer, have to say, do I want to keep renting? And our recommendation is, if you are going to keep renting, keep saving. Because
Correct.
you got to save for that down payment, those kind of things. But like that 4% can be a big deal, or it can be not that big a deal also, right? I mean, I think everyone wants to see their housing costs go down. I totally get it. But we're not talking about a huge difference from 31 to 35. And so like when you look at where wealth in the United States comes from, the average renter is worth around $10,000 versus the average homeowner is worth almost $400,000. And you look, okay, it may cost me a little bit more right now.
But you can always refi and streamline it down the road, and that will save you a lot of money down the road as
Yeah,
well.
yeah. So we are looking at mortgage rates easing over the future. Inflation is heading in the right way. We will see some fluctuations. That's always going to happen. Jobs and employment, that's one of the reasons why the Fed moves the federal funds policy around, is because they are looking to try and keep jobs plentiful, but not too plentiful. As weird as that sounds, and then
It's
government
a it's a
regulations,
it's a
right?
fine
Yeah.
balancing act. So
So, I mean, we are looking at mortgage rates starting to decline heading into 2025 and beyond. They should just slowly, I mean, and it's going to be a bumpy road. It always is. And, it's going to go up a little, down, up a little, down a little. But over time, we'll be seeing more mortgage rates easing. But you still have to ask yourself, is it ready? Am I ready to buy now or later? But you want to make sure that you're going to live in that home for a good 4 or 5 years, kind of thing, before you're ready to move. It has to be the right decision for a lot of different reasons.
mhm.
But understand that that's where wealth really does kind of come from. Now,
Are you able to buy a home when you have a student loan debt?
I mean, right now, 25% of Americans are paying off student debt. One out of four. Like that's and that um, you know, for our younger buyers and for younger Americans, that percentage is much higher. When you say 25% of all Americans are paying it off, that's a really big deal out there, kind of thing. And so there's a lot of debt out there. And so some folks like, well, I have student debt, so I can't possibly buy a home.
Oh,
Well,
yes, you can.
yeah, that's the thing, is you absolutely can.
Talk to your lender because they can explain to you what they take in consideration as your student debt
Yeah.
as to your debt to income ratio, and they can help you sometime modify, if not combine, multiple student debt into one.
Right. And so Um, first, we just want to say, we're not lenders. We're not trying to be lenders. Talking to your lender, but we do want to kind of offer some advice of that. Like having a student loan, it will impact the purchase of a home, and
Correct.
and so the first way that that's going to impact you, if you do have student debt, doesn't mean you can't buy. But like what are those factors? So the first thing is going to do, it's going to impact your DTI, debt to income ratio, right? Because you've got more debt than you have income putting for it. And so that can make it more challenging. If you have a ton of debt already
Correct.
out there, it will affect what your buying power really is. Doesn't mean you can't do it. It does mean that you could be constrained a little bit by it.
Correct. Or
Yeah.
you qualify for a much lower amount than what your salary
Yeah.
is. So, that is taking consideration. Also, your interest rate and monthly payment.
Yeah.
The mortgage lender do review applicant with high DTI risk and often charge a much higher interest rate,
I don't
which
say much, but
I
higher.
know
Yeah. I
I
mean,
know
like,
it's like catch 22. I have all these debt because whatever, but because of that, now it's going to cost me more to purchase a home.
yeah.
So what you want to do is consult with your lender and making sure um, that you can have a plan of action, and sharing with Wi-Fi team is awesome.
Yeah. So, the other thing that's going to impact here, high levels of student debt, in addition to impacting, your debt to income ratio and that kind of stuff, it can also impact your credit score.
Absolutely.
And so, like you got to make sure that you keep those bills being paid. You
Hmm.
stay on there. Uh, Having student loan is going to impact how much you can borrow. It will impact the amount, because, and it really, I know it seems like we're keep going back to debt to income. When you have a higher debt to income ratio, that's going to impact how much home
You can buy.
that you can do there. And then in addition, you're going to like the types of loans that you can apply, and especially if you're in default. If your student loan is in default,
You
you can't
cannot.
do a VA, you can't do an FHA, you can't do any kind of government backed, you can't do USDA, those kind of things. Doesn't mean you may not qualify
Or money
for
lender.
conventional or different things like that.
That's going to be tough
But even that's
because,
going to be tough, right? And
well, so with conventional loan, you got to have higher credit scores. So the
yeah,
reason why you're not in a higher credit score is because all the debt you have. So once again, it is kind of like catch 22, but at the same
yeah,
time, understand how you can combat this and reduce your debt and increase your credit score, it's going to help in the long run.
Yeah. Now, how do you fix or how do you improve, I guess, your chances of buying a home if you do have student loans? And first thing, and this is one of those, it sounds like a boomer answer, right?
Increase your income.
Make more money. Yeah.
Yeah.
Well, but it really, ask for a raise. A small increase in income actually makes a pretty big impact on.
Or, I have clients that actually got second job.
Yeah.
And so,
Maybe it's right.
maybe that is the right thing for you. Maybe it's not.
Yeah.
So, we all have obligations, family demands, and what have you.
Yeah.
So just look at your scenario and see what you can do to improve your income.
Second one,
pay down your debt.
Pay down your bills. And like if you can eliminate any debts,
And sometimes it's about not spending. So it's not just about paying. It's about stop going Starbucks 5 days a week. Maybe you want to cut back that to once a month, and you'll be amazed how much money you save.
Yep. Third one's going to be, can you improve your credit score? Paying all your bills right on time, being ahead of the game, those kind of things. Higher credit score is definitely going to improve your chances.
Absolutely.
Maybe you have someone that's willing to be a co-signer for you. We see a lot of parents do that for their children, that kind of stuff.
And last resort to get down payment system. There are a lot of down payment systems available, but you got to ask the right question with the lender. And you got to be very honest with them on what your wants and desires and goals are, because they're what I consider a puzzle fitter. They fit you into a nice piece of puzzle to where they make it work.
So the weather outside, it's I'm not trying to go the whole Christmas song route here, but it is a little bit chillier, right? And cold. So, but what happens in the winter with home prices? And just generally speaking, the 3 months that has the lowest home prices every year, kind of traditionally, is December, January, and February. Those are the 3 months when home prices tend to be the lowest overall. And so, if you are looking to buy,
right now is really
now's the really good time. In addition to that, for our buyers, new listings of homes
up 8% from last year.
I mean, that's a big deal, right?
That means we have 8% more inventory.
No, more new inventory coming.
Correct.
Because in addition to having new inventory, we also have more overall inventory, and that's been steadily increasing. I mean, we're up pretty almost 40% this year over last year. And so it's good to see that inventory. Now, don't think that it has shifted so far that to where now all of a sudden it's this huge buyer's market. It's not. That's not the case. Our total inventory is still lower than it was back before the pandemic.
Correct.
And so we are heading towards a much more balanced market that should impact your buying decisions and how negotiations go. The sellers don't have as a seller, they don't have all the power in a transaction, those kind of things. Our buyers have a lot more negotiation options right now, as far as all that goes.
And just want you to know, 26% of pending sale, or if you list a property, is pending within 2 weeks if it's priced right, good condition, and also location.
Yeah. Because in addition, basically a quarter of all homes
still selling above their listed price because the agent was smart and listing those property at the right price.
So a quarter of our homes are under contract in 2 weeks. Another quarter of them are sold over list price. I guess what we're saying with this is, look, good homes in good areas, priced right, are still selling quickly.
Buyers see that as a value.
And as a buyer, I want you to be ready that when you find that house that's at a great deal, that's in a good area, that like those houses are still going quick. So even though we say the inventory's in,
you may not sleep in it.
Yeah. So even though we see inventory levels are rising, we are heading towards a more balanced market. Don't think that all of a sudden that you can just be like, you know what, I'll just wait, because the good properties are still selling really quickly. And we
do have some pent-up demands.
Yeah, we're not trying to be one of those like you gotta buy today, but by the same token, we also don't want to be like, well, why didn't you tell me? Why didn't you let me know this was going on? We really love this house. Like it is a negotiation, but we're in that balanced place. We're not where, as a buyer, you can throw around these crazy lowball offers. Our sellers also can't list properties for ridiculous amounts right now. It's a balanced market. So you just have to know that going into the transaction.
So if you need a realtor to help you decipher that, what the market's doing, we would love to help.
We would.
So please call, text, or smoke signal.
Yep.
Or visit us at max1partners.com.
Or call us directly at our office number, 678-782-5050, or you can even email the team at max1partners.com, and we'll be glad to help you out any way that we can find.
Thank you very much and have a great day.
Bye, everybody.